Today I'm going to show you how you can get more money on your paycheck by changing your exemptions. My name is Carrie Esso, and if we've never met before, I wanted to thank you for coming and watching. I have been in the personal finance industry for 20 years, and it is my purpose in life that I come on and I help people with their personal finances. So I do that, and I welcome you here today. I wanted to share with you how we can get more money on your paycheck, because who doesn't want more money on their paycheck? Am I right? Can I get a thumbs up? So I've been making videos like these so that we can talk just like this. So how it works is, let's see here. Yeah, we want to talk about it. So how it works is when you join a company and you come on board, you have that first day of orientation, and they have you fill out a W-4 form. So this is what you get like when you first go into your first day on the job. And what it does, it's an IRS form that your HR department's going to give to you. And what it does is it helps you go through the worksheet and select how many exemptions you want to say that you're going to have. That exemption directs your HR department how much income tax to withhold out of your paycheck to send to the IRS on your behalf. So if you say you're married, your wife, you have 2 kids, then it's going to, the worksheet's going to give you 4 exemptions. And then that is what your payroll department is going to use to base how much they're withholding on, okay? So what you're left with is your net income, and they ship that off to the IRS for you, okay? Now fast forward to January through April. If you're like me, it's like April 13th. And so now here you are, and you're ready to file your income taxes. And at the end of it, lo and behold, yay, you're owed a refund. So this is what happens when your employer withholds too much taxes out of your check. And what that means is that when you filled out this W-4, simply put, how it calculates it is not necessarily what happens in the course of doing your taxes. Just not to get too far ahead, but for example, if you have itemized your deductions versus taking the standard deduction on your taxes, which your accountant could help you know whether you do that or not, and I could tell you where it's at on your 1040, but anyhow, that's not taken into account in your payroll department, right? They're just here to process your paycheck, and that's all you really want them to do anyways. Send my taxes off to the IRS. Okay, so if you get a refund at the end of the year, that just simply means that they withheld too much out of your paycheck. And so what do you want to do about it? Well, let's talk about that. Hang in there, and I'll tell you that in just a minute exactly how you can do it. So last year, the IRS reported that they refunded $318 billion, billion with a B. That is 1,000 million, and a million is 1,000,000. So that is a lot of money. The average refund was $2,800. So if you think of it, it's about $2,400 or $200 a month that all of those Americans did without in their daily lives that they could have had for the other 11 months out of the year, making their lives better. So when you have this happen, this is what happened to us. This is our story. So we had come here and were gainfully employed, and we had a son. And lo and behold, the next year we got a $5,000 refund, and we were like, yay, it's refund time. And it was nice to have that cash windfall. But folks, what that means is that we paid an extra $600 a month. I mean, that's a really nice car payment. That's a rental payment. That's a lot of different things we could have been doing with that money all year long. Okay, $600 a month that we were paying into his payroll department that they were withholding because we asked them to. They were withholding it and sending it to IRS. So what we did is, this is my official way to fix it. It's called tinkering. So what we did then is we went back to his, you can print this off of irs.gov, or you can go to your HR department and say that you know that there's a way you can fix your exemptions, and it's a W-4 form. Like the W-2 that you get from them, only W-4. Okay, so how you fix it is if you're getting a refund, that means they're taking too much money from you. So, well, they're not taking it, they're withholding it, okay. But if you're getting a refund, that means they are withholding too much, so you want them to withhold less. So you make them think that you should be in a lower tax bracket by raising your exemptions. So I'll say that again in just a minute. So if you let's say you had a family of 10, okay, a family of 10 would pay less taxes than a single person who wasn't married. That single person with 0 exemptions is going to pay a lot higher taxes because they're going to file single and you're going to file married. And the exemption for that is always different. So what we did then is we adjusted our W-4 instead of the 3 of us or the 4 of us. We adjusted it, and we made it so that they took less taxes out, which made our paycheck bigger, which is why you're here watching. So as I was saying, if you take and you get your W-4 and you go, and if you have 4 and you're getting a refund, then you want to increase your exemptions so that they take less out of your check. If they take less out of your check, your paycheck is going to be bigger and your refund is going to be smaller, but then that also means you're going to be enjoying more groceries, gas bills, water bills, daycare, and all of those types of things. So here's the major argument I get, and I'm ready for it if you are, okay? Here's the major argument I get about this, is that, well, Carrie, we take that at the end of every year, and I'm not like making light of it at all, but at the end of the year, we take that and we go on a nice vacation. That's what we do. That's what we do with that money. We don't mind that we overpay for it. So what I wanted to say about that is that, number one, you don't always know that you're going to get your money back. God forbid, think of a scenario where a debt ceiling doesn't pass and you don't get that money back. Presently, the state of Alabama, I'm still waiting on my refund from them. It's only $45, but it's my $45, and I'm still waiting on it because, and thankfully we've got it, our system tinkered within that low of a breaking even point, okay? But I'm still waiting on it. Will I ever get it? I don't know. State of Alabama, I don't know. It might not ever recover. Maybe I wait 2 years until I get it back. So, let's not be all doom and gloom, okay? But that's a potential. That's something that could potentially happen. All right, and then the next thing is about the refund. Oh, right. Okay, so maybe you do like that, but what happens if, like I said, you couldn't ever get the money back, but why not enjoy that money every month instead of once a year? What I'm talking about is quality of life, okay? So you are here to learn how to make, or not make more money, but have more money show up on your paycheck without making more money. So if you could make more money, who would make more money? I would, thumbs up. I would make more money. You can't control pay raises. I mean, you can apply and you can excel, but you can't control when your employer decides to give you a pay raise, a bonus. You can't decide that. They decide that. You can apply, you can exert yourself, you can believe that you're the favorite one at the company, but you can't control that. What you can control is how much money you have every month by changing your exemptions. It's a very, very simple thing that not a lot of people think of, that they get at the end of the year, and then it's great. But what about this little bit of shift in thinking that, okay, let's enjoy our money every month? So think of it. If you were one of those average people that were getting an average refund of $2,800 every year, what would you do with $200 a month that you, granted, at the next year in April wouldn't get? Okay, granted, you wouldn't get that, but every month your life would be better. Personally, just right now as I'm saying that, I would feel a lot more relaxed. I can tell you that much. If I had another 200 bucks, I mean, seriously, you can do so much with that. And if you want, you can stick it in a savings account to go on vacation with next year. But you have it if you need it. Okay, so enough of that. So that's why I get that argument all the time. So I just like to address it. Number one, the things that you can change, change. The things you can control, control. You don't know when if you'll get that refund truly back. But state of Alabama, I expect my $45. All right, I'm coming for you. Okay, all right. So I wanted to give you a quick example of Bob. Okay, and I don't want to complicate things. But Bob, let's say the average income, household income in our area, Huntsville, Alabama, is $49,060. So that's average income. So that's about $4,000 a month. So let's take Bob. Bob, he makes on his paycheck. Here's Bob's check. Okay, there's Bob's check. And on Bob's check, he makes $2,000 in salary. Well, he's gone through his HR department. He said, I want 2 exemptions because it's Bob and Mrs. Bob. Okay, so they take out 30%. They figure that he's going to be in the 30% tax bracket because of that. All right, so Bob then also has other things that come out, right? He's got health insurance, 401k, he's got vision, dental, etc. So his net check is $1,100 because he's making $2,000. They're taking 30%, which is $600, and he's getting $300 worth of other things. So his net check is $1,100. Well, Bob sees this video, and being the intelligent man that Bob is, he goes down to his HR department. He says, I want to change my W-2, or excuse me, my W-4, and I want to say that I have 4 exemptions because every year I get a tax refund. Well, then it seems to the tax table. You can grab one of these at your local library or go to irs.gov. Okay. It shows you for what you earn, single, married filing joint, married filing, the 4 different tax brackets, okay? For what you make, it shows your tax liability. So if you're Bob and you're in the 30% tax bracket, it's fine. It's going to be all right. If you're Bob and you're in that 30% tax bracket, you're going to get a net check of $1,100. Well, you get a refund every year because probably what's happening is you're itemizing your deductions versus getting a standard deduction. So everyone gets like $4,050 on, and it's, one day I'll do a nice explanation of what happens with your taxes, okay? But everybody gets a standard deduction. So if Bob and his wife, that would be $8,100. Well, if Bob and his wife are active in their church and say he makes $48,000, let's say they give 10%, okay? That right there is $4,800, right? And so let's just say he's a very generous man, and they own a home, and they've got mortgage deductions, and everything kind of adds up to where they actually have a better net result on their taxes if they itemize than if they take the standard deduction. So in that instance, our friend Bob here, who's making $48,000. If, just real quick, just hang in there with me because you'll like it. So if he's married and he's filing joint, that's $6,276 that he would, on his taxable income, which is line 42, line 40, 43. Line 43 is his taxable income. So he would owe on that $48,000 that he makes income on $6,276, okay? If that was his taxable income. Well, he does his taxes and he's got some deductions. He's contributing to his 401k. That reduces his tax liability when he does that. So guess what? That doesn't put him at $48,000 any longer. It puts him at $47,000. Remember the old adage, the more you make, the more they take. So if you're making more, they're taking more. So in this instance, Bob would actually drop down into $47,000, and what he would actually have to owe at the end of the year would be less than what's actually coming out of his paycheck. So that would bring Bob into the 20% tax rate, and it would actually, and this was a fictitious example, but it actually did improve his net take-home pay by $200. So there's his net check is $1,300 as opposed to when he was in the 30% tax bracket, it was $1,100. Now, full disclosure and big time disclaimer, okay? Be very careful that you take this slow. So with my husband and I, we tinkered for 2 years or so, and we really kind of did it gradually. Once he got he was getting the same income every month, we just kind of said, okay, we changed our exemption by 1. And then the next paycheck you're going to see, okay, that made a blank dollar difference. So if our average refund is $2,400 and I made a change on my exemptions that made a $20 a month paycheck, then I know, okay, well, we need to go up another exemption from there. And so then you kind of keep my very scientific tinkering. Now there are apps, I will tell you there are apps that will help you, and I will put a link of 1 or 2 of the good ones that can help you do a more scientific study. But just the general idea is that if you do that, lost my train of thought, just a minute here. Oh yeah, 1 at a time. So if you do 1 at a time, then you will start to see that gradual, and then you can kind of get your bearings, okay? So then the more scientific method would be like getting an app or going to your tax table or calling a CPA, which, another disclaimer, I am not a CPA, I just happen to know about taxes, okay? And did you know that what death and taxes have in common? You know, they say that the only 2 things that are certain in life are death and taxes, but you only die once. You have to pay taxes more than once. Hey, give that smile. If I could do my own smiley face, I would do it. But all right. Anyway, so yes, I did want, seriously though, to disclaim, I'm not a CPA. This is not legal advice. I'm not attempting to sell a product. Really, none of that. Okay, I'm just trying to help people have better lives, all right? So you can do that. You can change your exemption. So if you're just joining, we're talking about changing your exemptions to get a bigger net pay without making more money or having an adverse effect, okay? So again, you're going to go to your HR department with a new W-4 and, take it slow. If you're having 0 come out, go to 1. Don't just say, let's go to 10. And then you owe $3,000 and then you get mad at me. And then, that's just take it slow. Take it 1 at a time. So, yeah, just to review, we talked about the W-4. We talked about how the IRS refunds $318 billion every year. That Bob, just by changing his exemptions, like literally I did a fictitious example that came out to $200 a month. And then the whole logic of, I like getting that big chunk of change at the end of the year. Just number 1, you don't know that you'll get it back. Number 2, and it's an interest-free loan. Would you give me an interest-free loan? Because if you would, let's talk. Okay, so it's an interest-free loan. You don't necessarily know that you're going to get your money back. And then you can have a better life every day of the year. All right, so remember, if you want to take care of that, you can go, what's today? Thursday. Go in tomorrow if you want, or go home and talk to the wife or the husband or your significant other, okay, your partner in life. All right, so I wanted to say, now I did the big disclaimer, but if you wanted to hear more about tips like these types of things, I have a seminar that I do called Practical Prosperity, which is something that I go and I take people from where they are now to the promises of God concerning prosperity using practical financial principles like you saw in this video. So you can find out more information about that at karieso.com, which is KARIESO.com. Oh, please, if this has helped you, like it, share it. If you have questions, send me an email. My email is on my Facebook page. Send me an email, reach out to me. I will be happy to help guide you through it. Because this is what I was born for. So thanks a lot for watching, guys, and next Thursday, every Thursday, 1 o'clock Central Time, we'll see you next week. Bye-bye.